All right, let's zoom out a little bit. Joining us, Derek Izuel from Shelton Capital Management, the Chief Investment Officer. Derek, welcome back to the show.
Always a pleasure. Glad to be back.
Thank you very much. So can we approach the next 48 hours agnostically? How do we do that?
Well, there are certainly going to be effects seen in the market that are determined by how the outcomes are, and globally and domestically, the outcome of this election. So, but I would say that, long term, it is true. And when you get to the horizon of a couple of years, that really, presidents and governments, the effects they have on the economy is minor when it's compared to the broader economic forces that are going on.
Amen. Right now, if you had to break it down, I love that answer. Now I'm going to make it particularly hard on you. Like for the next, maybe from here to year end, or at least in determining the direction of VIX, what do you think that breakdown is like right now? If you had to quantify it, what's going to drive the market? What percent does the election contribute as a catalyst right now?
Well, I think there's a couple. Obviously, there's a combination of who wins the presidency, and then what's the mix of the other houses of Congress as well. And I think in particular, how those will affect interest rates and spending. I think that if you see a red sweep, then that's going to be viewed as bearish for bond markets, and that interest rates will go up. And that's going to manifest itself across the world in ways such that the dollar will likely continue to be strong. International markets, particularly in the equity side, likely be weak.
Right now, Powell is getting ready to deliver another 25 basis points, according to the bond market. I'm curious how that factors in, especially if you think that the election could have a potential impact on rates or the shape of the curve. Where does Powell then rank with his 25 bips?
I think it's a non-event at this point because, it's just much longer visibility on where the rates direction is going to go as opposed to what's really baked in right now. And like I said, the direction of the curve and the direction of rates has wide-ranging effects, worldwide.
Jerome Powell still has time on his tenure, but folks in the Trump campaign have spoken quite harshly of him, and it's unclear maybe what measures could be taken. I'm curious if investors should have thoughts on stability at the Fed. Seems they've done a decent job shepherding us back to something close to what we desired inflation-wise. So is there any black swan risk in your mind around Jay Powell?
I think there is. I think there's, if at least if the Republicans take power, given the things that they said, there's two challenges. One, that Powell gets pushed out, which would be very unpopular with financial markets. I think people are fairly pleased with the job that he has done so far. And the second one is that to what extent his removal will actually demonstrate a breakdown in the independence of the Federal Reserve to the central government or to the government. Those two are supposed to be independent. We've always had some questions as to how independent they are. Powell's done a good job maintaining that. If he's ousted and someone's put in there that looks like they're simply just an extension of the executive branch, that could kind of damage our confidence in our markets worldwide.
All right. Is there a way to express that through an investment or a trade, or is that sort of like just a long kind of, is that sort of in your mind still a speculative kind of low probability event?
I think it's a low probability event because it would be extremely unpopular with many financial investors, either here or overseas. And so there would be a lot of pressure on the executive branch not to take steps in that direction. But if you really believe that that was going to be the case, it's likely bearish for U.S. bonds. The U.S. Treasuries become less of a source of safety, and thus, in the long term, might not be the destination of a flight to quality the way they have been in the past. Okay.
Hey, what will you be looking for to know if that's true? Because we just had a pretty strong bond auction last week. I mean, it seemed like there were still buyers there. I guess we watch those to see if they get worse, if they get choppier, longer tails.
Yeah, I think there's a lot of things that weigh into where interest rates go. Some of it's term premium related to the economy, some things related to inflation. And there's a lot of models that aren't worth getting into right now about how those things add up to where our bond rates are. And if you end up getting this sort of extra factor in that model, this unknown factor that represents this lack of confidence in our treasury markets, where the other pieces don't quite add up to where interest rates are, that's when I would start to get concerned. That would be the market speaking that they see something that they're unaware of or they don't like related to the independence of the Federal Reserve.
Okay, well said. Derek, let's talk some ideas. You got some stocks and you're kind of taking the international perspective as well, which I think is interesting. A couple of your stocks are international in nature. GF Securities, Hong Kong-based brokerage firm, HDFC, Indian Bank. How come?
So, I focus on international markets for the most part. That's where my primary focus is. GF Securities is interesting. There's a host of different brokerage firms in China. It's a Chinese brokerage firm and trades in Hong Kong. We feel that GF is one of the best, the highest quality of them. And it's an interesting play right now because if you've seen the Chinese market over the last 6 weeks, particularly the end of September, a tremendous strength in that market based on stimulus from the CCP to try and shore up that economy and potentially create some from further growth. There's a whole lot of question as to how that will work well, but I do think it's going to increase trading activity and increase interest in the markets, and GF is in a great spot to benefit from that.
Cool.
And so, yep.
You can finish your thought, or is it the same for both?
I'm sorry, say that again.
Is the general kind of thesis the same for both the banks? If you wanted to finish your thought.
Well, HDFC is different. HDFC is the largest bank in India, so it's a great way, very diversified bank and acquisitive, one of the largest banks in the world actually now, and great way to play the Indian growth and a very solid selection in that area if you're just looking to get a handle on or get exposure to the growth in the Indian economy.
Got it. Okay, so kind of a regional top-down player, whereas GF seems like it's maybe got a little bit more kind of secular market share growth through the brokerage firm, trading pickup. All right. Hey, give me very
different kinds of investments.
Give me 30 seconds on Canon.
Yeah, so Canon, I mean, we all know them for their cameras. The cameras is actually a relatively small part of their business. I mean, printing is really their big business, but the Canon, the camera business is doing very well, as is their lithography business, right, which feeds right into the growth in semiconductors. And Canon has been making some great gains there. Cool. But what's also interesting about Canon is the printing business, which is about half of their business, has been a tough business. But what Canon's been doing is sort of restructuring that business towards more of a services focus to try and maintain the revenues and maintain the margins in there. And they've been having some success there, and that's starting to reflect in the stock price. So a nice combination of a steady business they've been managing to keep going, as well as the growth they stand to see from their camera and lithography business. All
right, awesome. Thanks, Derek. Chart looks pretty good right now for Canon. Appreciate the macro.
Yeah, they've been doing well.
And the stock picks, good stuff. Thank you very much. Derek Izuel, Chief Investment Officer at Shilton Capital Management.